Gold, symbol of wealth and trust. Gold has fascinated humanity for thousands of years. It has always been more than just a metal. It represented power, stability, and survival. Kings stored it, nations traded with it, and ordinary people trusted it when everything else seemed uncertain. Even today, when economies fluctuate and currencies lose value, people return to gold because it feels permanent, physical, and dependable in a way few things do. Throughout history, gold has symbolized security in times of crisis. When systems collapsed and paper money lost value, gold remained. This deep psychological association between gold and safety is what makes it unique among all other assets. Why gold attracts fraud? But that same trust also creates opportunity for deception. Whenever something becomes valuable and emotionally important, it attracts those who want to exploit it. Gold is difficult for the average person to verify, and most people do not have the tools or expertise to confirm authenticity. Buyers often rely on certificates, packaging, or the reputation of a seller. Fraudsters understand this psychology perfectly. They know that when people believe they are making a safe investment, they stop asking difficult questions. Trust replaces verification, and that is exactly where manipulation begins. Gold fraud is not just about money, it is about exploiting belief, expectation, and human emotion. From ancient to modern scams, gold fraud is not new. In ancient Rome, counterfeit coins were coated with thin layers of gold to deceive buyers and traders. The technique was simple but effective. People trusted what they saw. Today, technology has transformed scams into something far more sophisticated. Criminals use tungsten cores, industrial manufacturing, and perfectly replicated documentation. Some counterfeits are so realistic that even professionals struggle to identify them without laboratory testing. The lesson is clear and timeless. The shine of gold inspires trust, but that same shine can hide deception. Tungsten gold bar scandal. In 2012, the global gold market experienced a discovery that shocked investors and dealers alike. In New York, several gold bars were found that appeared completely authentic. Perfect weight, perfect shape, official markings. Yet inside, they contained tungsten. These were not amateur fakes. They were carefully engineered to pass inspection and circulate through legitimate markets. One of these bars reached a respected Manhattan dealer, proving that even experienced professionals could be deceived. The discovery immediately raised a disturbing question: how many more were already in circulation? Industrial counterfeiting. Investigations revealed that the counterfeit bars were produced on an industrial scale. Organized groups had identified tungsten as the ideal material because its density closely matches gold. By coating it with real gold, they created bars that behaved and looked authentic in nearly every way. Factories were producing these bars with precision, packaging them professionally, and distributing them through global channels. This was not small-scale fraud. It was systematic, calculated, and international. The level of organization showed that gold counterfeiting had evolved into a serious industry. Financial impact and lessons. Each fake bar was worth around $18,000. Losses reached millions, but the psychological shock was even greater. Investors realized that visual inspection and documentation were no longer enough. Trust in traditional verification collapsed. Dealers began rethinking procedures and buyers became more cautious. The scandal delivered a powerful message: even the most trusted markets are vulnerable. If professionals in financial centers like New York can be fooled, then anyone, from collectors to investors, can become a victim. Gold had always represented certainty. This moment proved that certainty itself can be counterfeited. Fake American gold eagles. In 2018, the United States Mint issued a warning that shocked collectors and investors across the world. Tens of thousands of counterfeit American gold eagle coins had entered circulation. These were not crude imitations. They were highly detailed, visually convincing, and designed to pass as official currency-backed gold. Many buyers believed they were purchasing safe, government-certified investments. The coins looked authentic, felt authentic, and even carried markings that matched real production standards. For many people, there was no reason to doubt them. How the coins were made. The counterfeit coins were produced with impressive technical precision. Their cores were made from copper or tungsten, materials chosen for their weight and durability. They were then coated with thin layers of real gold to create the appearance of authenticity. Packaging, labeling, and presentation were carefully designed to mirror official products. Online marketplaces made distribution fast and global. Sellers used professional photos, believable descriptions, and attractive pricing to build trust. Without specialized testing, distinguishing real from fake became extremely difficult. The damage and victims. Thousands of individuals lost money. Collectors, investors, and even small jewelry shops accepted the coins believing they were legitimate. Total losses exceeded $10 million. The emotional impact was just as significant as the financial one. People realized how easily trust could be manipulated in a digital marketplace where purchases happen quickly and often without direct verification. This case revealed a powerful truth. In the modern world, fraud spreads at the speed of the internet, and gold, once considered the safest asset, is no exception. Online gold scams in Germany. In 2020, German authorities uncovered a complex online fraud operation that targeted investors searching for secure assets. Criminal groups sold so-called investment gold through trusted platforms like eBay and Amazon Marketplace. Buyers received professionally packaged bars, complete with certificates and secure-looking branding. Everything about the purchase felt legitimate. For many customers, there was no warning sign, no moment of suspicion. They believed they were making a safe, long-term investment. Fake bar composition. Testing later revealed the truth. The bars were not gold at all. They were made of brass and coated with a thin layer of gold plating. Visually, they passed inspection and fooled buyers who relied on appearance and presentation. Only laboratory testing exposed the deception. The scam worked because it used familiarity. People trusted online platforms. They trusted professional packaging. They trusted the idea that gold is always safe. Arrests and consequences. Authorities eventually arrested the main suspects and courts issued prison sentences. More than 200 victims were identified and financial damage reached millions of euros. But the deeper lesson was psychological. Fraud today does not happen only in dark alleys or hidden markets. It happens on platforms people use every day. Trust has become automated. And when verification disappears, deception becomes easier than ever. The Bre-X mining scandal. In 1997, a Canadian company called Bre-X announced what appeared to be one of the greatest gold discoveries in modern history. Deep in the jungles of Indonesia, they claimed to have found a massive deposit worth more than $6 billion. Investors around the world reacted immediately. The company's stock price soared, and thousands of people invested their savings. The story captured global attention. It promised wealth, opportunity, and a historic breakthrough. Everything seemed real. How the fraud worked. But the discovery was not real. Investigations later revealed that drill samples had been deliberately manipulated. Gold dust had been added to the samples, a method known as salting, to create the illusion of a rich deposit. The company's value grew based on false data, excitement, and belief. Markets responded to hope rather than reality. It was a perfect example of how easily financial systems can be influenced when trust replaces verification. Collapse and impact. When the fraud was exposed, the collapse was immediate and devastating. The company's value disappeared almost overnight. Thousands of investors lost their savings, and total losses reached billions of dollars. The scandal became one of the most dramatic financial frauds in history. It showed how powerful belief can be and how dangerous it becomes when people stop questioning what they want to believe. Gold had once again proven that its greatest strength, trust, can also become its greatest vulnerability.